Welcome to the deep dive.
Glad to be here.
So today we're updating on the state of play as of Monday, May 5th, 2025. We're going to look at global economics markets.
And dive into what's happening with China's economy
Yeah.
specifically.
Exactly. And then finish up with the latest signals from S2 Underground Intel.
Sounds like a plan.
Okay, let's kick off with the global economy picture. The big headline recently was the U.S. economy, right? It shrank by 0.3% in the first quarter of 2025.
Yeah, that definitely got people talking. And, the usual debate about whose fault it is. Trump, Biden.
Right, the political spin.
Yeah.
But the mechanics behind it are, well, they're more complex than that, aren't they?
For sure. It really comes down to how GDP is calculated, especially how imports fit in. It's not quite as simple as imports just subtracting from GDP.
Explain that a bit. How do imports affect the number?
Well, imports are already counted in things like consumer spending or business investment. So to get the domestic production figure, you have to subtract the value of those imports back out.
Got it. So if imports jump up significantly.
Then that subtraction becomes much larger, which can pull the final GDP number down, even if domestic demand is strong.
And that's exactly what we saw in Q1 2025, wasn't it? A big surge in imports.
A huge surge, 9.6% annualized increase. That's, if it kept up for a year.
And the timing wasn't accidental, was it? This was companies rushing before those new tariffs hit on April 2nd.
Exactly, getting goods in under the wire. You heard stories like Apple airlifting over 1 million iPhones in March just to beat those deadlines.
Wow, okay, so that 9.6% import jump, what did that actually do to the GDP number?
It had a massive effect. Reports are suggesting that without that import drag, Q1 GDP wouldn't just have been positive,
It would have been.
above 4% positive, maybe even higher.
That's a completely different picture. So the negative number was really an artifact of that tariff front-loading.
Largely, yes. It really skewed things.
So the expectation now is what? Things bounce back.
Yeah, the thinking is that import drag should lessen significantly in Q2 through Q4, so we should see positive GDP growth for the rest of 2025.
Although the political commentary hasn't stopped, right? I saw Trump's already sort of blaming Biden in advance for maybe weak Q2.
Oh, sure. That's predictable. Economic numbers always get pulled into the political arena.
We should also mention, though, it wasn't just imports affecting Q1.
Right. There were other factors. Private investment actually gave things a boost, which is a positive sign.
But government spending was slower, which acted as a drag.
Exactly. So imports were the big story for the negative print, but not the only story. We'll need to watch how those other parts perform as the import effect fades.
Okay, really helpful context. Let's pivot to China now. What's the latest on their economic strategy, especially with their reserves?
This is, I think, really significant. China is, well, quietly but definitely reshaping how it manages its huge foreign exchange reserves. We're talking about something like 3.2 trillion US dollars held by SAFE, the State Administration of Foreign Exchange.
And the main shift is moving away from U.S. treasuries.
Precisely. Given all the, political friction with the U.S., they're strategically cutting back their reliance on U.S. government debt.
Was there a specific trigger?
The review seems to have kicked off after the Trump administration overhauled Fannie Mae and Freddie Mac. SAFE started looking more closely at alternatives like mortgage-backed securities, those bundles of home loans.
But treasuries were always the go-to, right? Because they're seen as safe and easy to trade. Liquidity, I think, is the term.
Absolutely. Safety and liquidity were key. But the trade tensions, the rising tariffs, and maybe crucially, this growing concern about financial markets being used as a weapon.
Like what happened with Russia's reserves after the Ukraine invasion.
Exactly that. The freezing of Russia's assets was a major wake-up call for Beijing, it seems. So they're proactively reducing that exposure.
How much have they reduced it by?
The official figures show SAFE cut its treasury holdings by over 27% just between January 2022 and the end of 2024.
27%, that's substantial.
It really is. It's a major rebalancing act.
So where's that money going instead, if not treasuries?
They're putting more into agency bonds, Fannie Mae, Freddie Mac. These are seen as having similar credit quality, but often offer slightly higher yields.
Okay.
They're also shortening the average time until their remaining U.S. bonds mature the duration. That reduces sensitivity to interest rate changes.
Interesting. Anything else?
Yes, gold. Their allocation to gold has jumped quite a bit. It's now around 6% of reserves, up from maybe 2% just a few years back.
gold as a safe haven, maybe.
Potentially. And they're also dialing back investments in private markets, especially in sensitive areas like U.S. tech, using vehicles like a Rosewood Investment Corp.
So it's a multi-pronged strategy. Diversify assets, reduce duration, increase gold, cut sensitive private exposure.
That sums it up pretty well. And it's not just what they hold, but where they manage it. SAFE is quietly shifting more operations away from Western centers with a big planned expansion in Hong Kong.
But can anywhere else really replace the U.S. Treasury market in terms of size and liquidity?
That's the major constraint. No other government bond market comes close. And experts warn that if China tried to dump treasuries too quickly, it could seriously disrupt markets and hurt their own returns.
So they have to tread carefully.
Very carefully. It's about agile maneuvering, balancing safety, liquidity, and returns in a really volatile geopolitical climate.
How are Washington and, the wider financial world reacting?
Publicly, officials on both sides are trying to downplay fears of a financial Cold War.
But privately, or among investors?
The possibility that China could weaponize its treasury holdings, even if unlikely right now, is making global investors think. They're looking at diversification, hedging. It shows the U.S.-China economic relationship is definitely shifting ground.
Okay, and what about the trade and tariff situation itself and the movement there?
Well, there were some comments from the U.S. side hinting that tariffs might eventually come down, acknowledging the disruption caused by these really high duties, some reportedly up to 145%. Yeah. And suggesting China wants things back to normal. But then you remember, after the last U.S. tariffs were announced, China hit back with its own duties, up to 125%.
So, tit for tat.
Although, interestingly, reports now suggest China has quietly rolled back maybe a fifth to a quarter of those retaliatory tariffs.
So maybe some de-escalation behind the scenes?
Perhaps, but the whole situation has definitely added to market volatility and price pressures globally.
Any signs of actual trade talks starting up again?
China's Commerce Ministry floated the possibility, which gave U.S. stocks a little bump. But the U.S. administration response was basically no immediate plans for leader talks. They stressed the need for a fair deal first.
So, still a ways to go. Meanwhile, are Chinese companies finding ways around the tariffs?
They're certainly trying. We're seeing more use of what's called origin washing, routing goods through a third country to hide that they came from China. South Korea just caught a big shipment, like $21 million worth, falsely labeled as Korean, but actually from China heading to the U.S.
And this is impacting e-commerce too.
Big time. Temu, the big online platform, has apparently stopped direct shipments from China to the U.S. because of the new tariffs. That could really shrink their U.S. business and cause headaches for other low-cost players like Shein.
At the same time, the U.S. seems very focused on securing certain materials.
Yes, especially copper. There's a big national security push, several executive orders to boost U.S. copper production and mining. Copper's being called the new oil.
Why the sudden focus on copper?
Demand is surging, think EVs, renewable energy infrastructure, but supply is struggling. Global mine production might peak as soon as 2026, and we're looking at a potential 700,000-ton deficit just in 2025.
Okay, that's serious. Now, another concerning thing you mentioned earlier is China and its economic data, or lack thereof.
Yeah, this is a really worrying trend. The Wall Street Journal had a piece on how Chinese authorities have just stopped publishing hundreds of key economic indicators.
Stop publishing,
all sorts of things. Data on land sales, crucial for the property market, vanished after showing a huge 48% drop in 2022. Foreign investment data is patchy. Unemployment figures, especially youth unemployment, that got suspended after hitting over 21%, then came back with a revised lower figure that excluded students.
So removing inconvenient numbers.
It looks like it. Even things like soy sauce production, cremation numbers after zero COVID ended, a key business confidence index, they're all gone.
Why would they do that? Just to control the narrative?
That seems to be the consensus among analysts. It's happening as China faces real economic headwinds, property sector issues, youth unemployment, trade friction. So withholding data that looks bad helps manage perceptions, I guess.
But how do economists figure out what's actually going on then?
They're getting creative, using proxies, things like box office ticket sales, satellite images of nighttime lights, cement output, electricity use, trying to piece together a picture.
Which must make you pretty skeptical about the official GDP figures, like that 5% growth reported for 2024.
Extremely skeptical. I mean, even former Premier Li Keqiang famously preferred looking at things like electricity use and freight volumes over the official GDP number.
Right.
And while the official 5% hit the government target, you had independent groups like Goldman Sachs estimating maybe 3.7%, Rhodium Group suggesting only 2.4%. There was even an economist at a Chinese firm who reportedly got silenced for suggesting growth was closer to 2%.
That doesn't exactly inspire confidence, does it?
Not at all. And you see the impact. Foreign investors pulled over $2 billion out of Chinese stocks early this year. And then the Shanghai and Shenzhen exchanges actually stopped providing real-time data on those foreign flows.
So, less transparency all around. Is it harder to get historical data too?
Yes, a 2021 law made accessing data within mainland China much trickier for outsiders. Corporate registries, even satellite data, it's become more restricted.
And they seem particularly sensitive about certain sectors.
Definitely. Like the property market. A research report showing high housing vacancy rates got quickly retracted. Lots of other metrics have just disappeared. New stock investors, toll road data, debt balances.
It's bizarre. Disappearing debt balances, but then sometimes random data comes back.
Yeah, like the report mentioned data on school toilet sizes reappearing. It's inconsistent. But data that might hint at deeper problems, like demographic decline or fiscal issues, think vaccine distribution, detailed birth stats that remains hard to find or unreliable.
So the bottom line is, Beijing's clamping down on information just when the world needs it most to understand their economy.
That's exactly the concern. More opacity when transparency is crucial.
Okay. Let's shift gears for our final segment, an update from S2 Underground. What's the intel covering the period from April 27th to May 3rd?
The main takeaway this week seems to be rising social tensions, particularly in the U.S.
What kind of tensions?
It flags a few specific events, the Carmelo Anthony trial, the Luigi Mannion trial in New York, which saw demonstrations, and some incident in a park in Minnesota. The report notes these are sensitive topics, hard to discuss without causing offense.
And these are seen as indicators of something broader.
Yeah, the assessment is they could be like a litmus test or a barometer for underlying societal pressure. There's a concern this could lead to more, random acts of violence, potentially socially or racially motivated in the near future.
Is there any sense if this is organic or being stirred up?
That debate is ongoing, apparently. The intel doesn't definitively say.
Okay. What about internationally? Any updates there?
The power outage in Spain. Power's back on the Iberian Peninsula, but the cause is still murky. Theories range from freak atmospheric stuff to conflicting data between government agencies.
So no clear answers yet.
Nope. Just a reminder about grid vulnerability, maybe. Ukraine situation, no major change reported, but it mentions the U.S. taking a less prominent role in peace talks, and a deal that looked close seems further away now.
India, Pakistan.
Still mostly posturing military exercises. But the report stresses the water situation in Pakistan remains really serious.
Yemen. Syria.
Bombing in Yemen continues. Syria, though, is described as getting increasingly serious. Israel and Turkey are using it more as a proxy battleground, expanding their incursions.
Any significant military movements tracked?
Usual stuff with U.S. carriers. There was some speculation, unconfirmed, about an Indian carrier near Pakistan without escort, some minor rail movement between India and Pakistan, but no heavy equipment confirmed. And Turkey and Israel continue their sort of aerial diplomacy, flying fighters over Syria.
What about that kinetic activity tracker map S2 uses?
It's showing more activity. A lot of red on the map is the phrase used, looking at the year-to-date total.
Any specific domestic incidents flagged on that tracker?
Yeah, a few. In the Northeast, there was that scare at the New York Criminal Court, white powder in the mailroom, 7 people hospitalized, but no follow-up reported. And another disruption at Newark Airport, tower lost radar or comms, vague statements.
Okay, what about elsewhere?
Southeast May Day protests were apparently pretty docile this year, even though leftist groups had announced staging areas.
Anything more serious?
There was a disturbing case in Georgia. A guy named James Blake Montgomery was being served divorce papers, allegedly shot and killed one deputy, wounded another. Then, after a chase, they found what's described as a mobile IED factory in his RV.
An IED factory?
Wow! Was there any warning?
Apparently it came from a tip line report.
That Georgia case sounds serious. Any other concerning domestic trends?
Yeah, the report highlights a trend of these kinetic incidents hitting smaller towns. There were tip line reports from Okanogan, Washington TDA propaganda, threats at the courthouse, but local authorities allegedly weren't very interested. Then in Oregon, 2 IED incidents. One was a pipe bomb with BBs deliberately made, found near a church in a small town called Elrand, just found by someone walking by.
And the other?
Multiple IED detonations at a house in Salem. Details are sketchier, maybe a domestic situation, someone was arrested.
In Wyoming? Yeah, an illegal alien released by a judge, didn't show up for court, then got arrested later trafficking 18,000 rounds of ammo. The tick line info suggests a possible cartel logistics link.
18,000 rounds. Okay. What about that U.S.-Ukraine mineral deal S2 mentioned before?
Still being framed as the U.S. recouping costs for aid sent to Ukraine, but the S2 perspective raises questions about it being potentially exploitative, like breaking kneecaps, given Ukraine's situation.
Are the details any clearer?
No, still very little public info.
Yeah.
And there's speculation Ukraine might have sold rights to minerals in areas Russia now controls. Trying to map mineral wealth versus front lines is tough, though. Data issues.
Got it. Any final points from the S2 update?
Just reiterating that India-Pakistan, despite social media noise, is mainly exercises and shelling mountaintops, not direct conflict yet. The water issue for Pakistan remains critical, though.
And GhostNet.
A large number of those intercepted reports came in this week, and notably, they now include UHF-VHF frequencies, maybe as a last resort, analog radio backup.
Okay, so quite a range of updates there. We've touched on the U.S. economy's wobble, but expected recovery, China's big strategic shifts with its reserves, and the worrying data transparency issues.
And then this whole spectrum of S2 intel, from rising social tensions in the U.S. to ongoing global flashpoints and these concerning domestic incidents.
It really paints a complex picture. So the final thought for you, our listeners. Considering this web of interconnected economies, the rising geopolitical stress, the information gaps, how does all this individually and together maybe change how you think about stability and risk in the near future?
Yeah, it's definitely a lot to process, a multifaceted landscape out there.
Absolutely. For more deep dives into these kinds of forces shaping our world, please do like and subscribe.
And if you find these explorations valuable and want to help us keep making them, there's a link to our GoFundMe page in the show notes. We appreciate any support.